What's up, guys? Welcome back. Hope your Monday is going good. We had another green day somehow. I don't know, this is 3 or 4 in a row. Yeah, we're up, let's see, 167 today. It shot up here and then it kind of sold off for us. I cut a lot of positions that I didn't like. We would have been up actually 200 more if it weren't for Kodak selling off so much today. And I got out of Kodak. I took a loss. I don't like to take losses, but I don't want to bag hold Kodak until there's they finalize on insider trading and all that to, you know, to see if it rebounds. If it starts to come back up, maybe I'll jump in on the run, but I just want to cut it off. I wanted buying power to do SPY credit spreads, so yeah, I cut out of quite a few stuff today. Let me show you this. Let's see. And I bought into some stuff. So what'd we do? So my the things I had 100 shares of, I sold calls on to collect some premium. And remember how I was saying I like to wait until it's having a green day. That's true. I do like to do that. However, if a stock is just going down, unfortunately, hopefully you don't have 100 shares of it, but if it's just going down for consecutive days, your calls are going to be worth more, even if it's a red day, if it's closer to that strike. So if we look at, like, I mean, AEL is probably a good example. So even though this day was red and it was going down, the calls at the strike price, you know, right up here around $14, they would have, you know, you would have gotten more premium for them if you sold them here than if you sold them probably here or here when it was going green, just because this is further away from the money, further out the money. So kind of both ways. If you think it's going to rebound, I mean, you can look into it a lot, but if you think it's going to rebound, then you could wait a day or two or however long until it's green and then try and get more premium. Or if you think it's going to keep trending down for a bit, you could just sell a call right then. So yeah, I just went through and sold calls and stuff that I had 100 shares of. And there's stuff I just want to get out of some of this stuff. It's going to take some time to rebound, I think, like the cruises and the airlines. So I'm just going to keep selling premium until I'm, you know, more profitable on them and go from there. So let's see. What did I do today? So I sold Kodak, took a little bit of a loss, like a $200 loss on that. I collected some premium though before I sold it. I actually bought to close that call I sold on it. So just so I could sell the shares. I didn't want it to drag down the account. This account's weird because it's got everything in here right now, so it's fluctuating quite a bit, as opposed to like a long term where it'll just be usually a little more smooth. But let's see, Square did it. Okay, yeah, you guys saw this was before. This is not 5 hours ago. Oh, okay, so I did. We'll get back to that. I'll just show you guys what I bought into today. INO. Okay, those are all those. I bought Carrier. This is the big one I want to show. I think Carrier is a great stock. They do the HVAC. Oh, hi. They do HVAC systems. They've had crazy growth since they've IPO'd. They're a good company in my opinion. You can see when they IPO'd down here, I believe this was their IPO, and it's just been, you know, nice, clean, steady run up through the pandemic and everything. And then with UV lights and people wanting cleaner air for viruses and all that, I think HVAC will continue to grow. And I know Carrier, I mean, I even have Carrier units in my houses, and they're a good product, at least. Again, this isn't a recommendation. I'm just telling you what I've done. I sold my Macy's shares. I had 100 shares of Macy's, and I sold my covered call on that. So my covered call I bought back. I still had a little profit on that. My Macy's, I pretty much cut out even on that Macy's. And then what else did I sell? Yeah, I had 1 share of Winnebago I sold, and then that stuff. Okay, so yeah, that's pretty much what I did. I sold out of, INO also. I sold my INO shares for, I had a little gain on it, but it's like, I don't really want it. So a lot of the stuff was red today for me. But I want to buy in more shares of Verizon, I want more shares of O. Some of these dividend ones. I want more of Abivi. I'd like 100 shares at least of all those. And then IRM too, I want 100 shares of Levi, NCLH, AAL, and then these biopharmaceutical ones I'm not really caring to hold too long term. And even Wells Fargo I'll probably sell out once it's run up. And I have a covered call on it anyways, so yeah, so we've got money coming in on that. So then what I did on these is I just buy back. So I placed this when was that? Let's see. Okay, so the 14th. I sold this premium on the 14th, sold the call, and then today, was it today? Yeah. Today I just put in a limit order to buy it back at $1, and then I did just buy good till cancel. So basically this is at $13 return now. It'll hopefully climb up to 14, 15, 16. Then once it's at 16, it should be able to close this position. It'll automatically do that since I have a buy to close. I did one contract and then a limit price of 0.1 and then good till cancel and then submitted it. So I don't have to worry about it then. It'll just automatically close once this contract is really close to worthless. That might happen on the 21st or that might happen tomorrow, and that's why I do that. So if it happens earlier, then I can get my capital back or my shares to sell more calls. The big play for today though that I wanted to mention, if you watched my video, let's see, 2 days ago, you could see I was calling out Square and Zoom because I thought they were going to have another little run. I just saw from the technicals and stuff, the way it looked to me was that it was going to go up. I think that was this day. Might have been even earlier. Might have been this day. I just looked at the MACD, the moving averages, the consolidation. It just needed a little bit of support from the rest of the market, from the SPY and stuff. Because I think it called it out this day or this day, so it didn't do much yet. And then it sold off a little bit, but that's the day we were kind of red, I think, for the red on the tech companies. That day everything was red. There was tech. But then today, yeah, it ran up. Look at that, 7.5% on Square, and then same thing for Zoom. Zoom is below the 9 moving average is below the 180 moving average, so that's not quite as good. But then, and I called this one out, I think it was the 12th or the 13th. So then it had to kind of this red day with the rest of the tech companies, but then today on Monday it had a crazy good growth, so up 8%. And if you remember, we bought in debit spreads on both those. So Square, this is the Square debit spread, so it cost us $104. Today we're up $122, so we're already up over 100% on this one. Yeah, so this is pretty sick. This is what kind of hedged the losses I took today on Kodak, because Kodak today the losses were like $200. So, and you know, we were down some on Wells Fargo and Space. But yeah, if you look at these, yeah, these are my big hedgers pretty much that kind of kept the account green for today. But yeah, so Zoom and let's see, Zoom is up 54%. This is a lot more expensive contract. Yeah, these are debit spreads. So I have another video explaining why I think this is kind of the best way to buy option contracts. Just a little safer and it's cheaper. So you're buying a call and selling a call, or buying a put and selling a put. So if I just bought this call, yeah, you can see it would have been sick. It would have been up $800. However, it wouldn't have been as safe, and it would have cost me $1,100. So that's just a huge risk. But yeah, I mean, I did see pretty certain that these were going to go up. I thought pretty surely that they were going to climb. But I mostly want to do debit spreads now. I don't want to do naked calls, naked puts for the most part. And then yeah, credit spreads on SPY looking good. I just got into this one today. This is expiring on the 19th. So this is maybe a little more risky. It was like on the E-Trade probability thing, it was like 90% chance, or no, like 95% chance probability. Even though this is pretty close to the money, it's 332, so it basically can't go below 333 on the next expiration. So we're here by the market close 19, it can't go below 333, which is right about here. So it's possible. I mean, just terrible news basically to have a 2-day drop that far, but it can happen. I mean, look right back here. Like, this was a pretty big drop. The next day it did rebound, but yeah. So we'll see. The credit spreads I'm liking. I'm doing that with my E-Trade account. I'm doing that with also my Webull. No, not my Webull, but my E-Trade and Robinhood are doing that. And yeah, it's been sick. So I pretty much started doing that right like here, kind of right in here in the timeline. If you can see, like, kind of slow growth of just selling premium, selling calls on selling covered calls, and then selling puts, which is good and that's safe. And then it's a little more risky to sell, I guess, what I'm doing with these credit spreads, but so far it's worked out fine. So that's where you see it's kind of grown quicker up here. Yeah, so this is kind of the long-term stuff in here, but yeah, I'm gonna keep doing that. On the E-Trade, I can do it daily. So if the contract expires that day, I can sell a credit spread on the SPY, which is nice. So if it ends that day, expires that day, I'll sell one there. And then on Robinhood, what I'm doing is I'm just doing it for the closest expiration out. So today would have been August 19th, which is Wednesday. And then I could have done it tomorrow too. You'll get a little more premium if you do it 2 days out. But yep, that's kind of what I'm going to keep doing with this one. And then I kind of, like I said, I want to trim stuff that I don't like once I'm more green on it. So NCLH, AAL, we'll trim those, get rid of those once they're green. Space as well. But we've sold, and we've made money on them. We've sold covered calls on them and collected premium, so that's good. And then yeah, I'm stoked on these debit spreads. They before I wasn't even hardly trading long calls not on Square but on Zoom, just because they were so expensive. Like, it was insane. So to do it with a debit spread just makes a lot of sense. Like, I would never want to pay $1,100, not at this point, on a just naked call. So happy to do that. Happy for another green day. Trading up for Silent Yacht. See what happens. Yeah, I was gonna do maybe a little strategy video. Oh yeah, I have a little strategy video on Robinhood, a very simple trick if you're new to Robinhood that will save you small amounts of money, but small amounts of money over a long period of time become large amounts of money. Thanks for watching, guys. Another green day. We'll see you tomorrow. Remember to like up, sub up, comment down, and make your money happy money. All right, peace out.